Well, typically you'll see a lot of news from various channels and web pages and blogs that are very much specialized in silver and gold, and they'll tell you, they'll pick the facts out as they need them to show bullish cases for the metals. But looks like Reuters has a very good story out, and it's true. It's right off of Reuters, just a couple days old. COMEX stocks are down 30% since February of 2013, and the stockpiles of gold have been accelerating, the removal from their actual physical stockpile. And basically they want gold. They don't want paper. They want gold. And it's exiting out of the COMEX stockpiles. Now, what's interesting is all his dealers are switching to selling into the burgeoning Asian market. Those are the ones that are actually buying a lot of the gold, too. Now, I'm going to say this. I think the end is in sight here pretty soon because, we had this long-ass pullback, and now we got this devastating pullback in silver and gold. And a lot of people are saying, it's going to stay down for the next 2 years. Doubt it. I think it's actually within it. Probably we're going to see new heights by 2014. We're probably going to see a lot of recovery this year and probably, a lot higher. I don't know what's going to happen exactly because it depends upon global outside events, tensions in the Middle East. I've always said that. I don't know when that's going to happen. But it is a fact that the U.S. dollar is pretty much on a way out as far as at least the global reserve currency. Because what's going on now, the Eastern nations have already assembled the Eurasian Trade Zone, otherwise known as the Development Fund. They're using a development fund sort of like as a central bank for the BRIC nations. Brazil, Russia, India, China, and South Africa. So, in other words, they're not going to have to use the dollar for trade in the future. It's already on the table as an exit to the dollar as a world reserve currency. So I think what's going on here, this is the final hoorah, you're going to see for the metals. But Jim Rogers, he's stating that he wants to get in, and he's looking for an entry point. Something else Jim Rogers told me, and I think he doesn't really play games too much. I don't think he's really playing games with people, but he says he's a bad market timer. I personally think he might have missed his best entry point already for gold or silver or whatever. I think he might have missed it. I don't know if it's going to continue down. He also states that gold is going to be good for the next 10 years. I don't think it's going to last that long. I think the actual final peak is going to be around 2017, maybe 2018. Not 10 years from now. I think it's actually coming up pretty soon, and we'll know. We'll know because it's going to accelerate like crazy near the end. And it's going to be tough to call exactly where that top is, but I always say it's just selling stages. Now, a lot was big hoo-yah today about the Dow going over 15,000. Now, there's an old adage out there about, sell in May and go away, and that would have been right for the last 3 years. But I was reading something that J.P. Morgan is actually hedging the other way. In other words, they're hedging, bearish, so actually you should be bullish. And at least for a few more months. I don't know. I don't know. Some people have been trying to short the markets. I know the earnings really aren't there the way they should be. Companies are playing games like they're buying up their own stocks to keep their prices up high. The Federal Reserve is actually propping up the stock market, but they could just keep propping it up. I wouldn't advise anybody to actually short the market. I know Greg, I'm not knocking Greg Mannarino, but I think he's been telling people to do that. And I ain't too cool on that. Because one thing I'm paying attention to a lot is Mark Faber. He says he's nervous. He would be afraid to short the U.S. stock market. He doesn't think it's going to have a correction sometime. But he would be afraid to short the U.S. stock market because there's been so much money printing, so much QA. And it's quite obvious that the Fed's policy is actually keeping up the U.S. stock market. So it could be up for maybe sell in May is not going to be a good thing this year. It would have been last year, the year before, and the year before that, but it might not be this year. It may take till the summer before there's a correction. I don't know. But, as far as gold goes, You know, with this much disappearing as far as actual physical gold, I'd have to state that. I mean, this is right off of Reuters. This isn't coming off of, your typical silver gold by me, shiny silver coins. I don't want to name names, but the typical things out there. It's right off of Reuters. It's a fact. It's a fact. People are buying up. They want the physical gold, and that's what's disappearing. The COMEX stocks are down a lot. They've been down. They haven't been down this much in 5 years. So, what does that tell you? I don't think you're, a lot of naysayers say stay in cash for the next several years. I think you're a fool to do that. Totally. I mean, you shouldn't be totally out of cash or anything like that. You need cash. I mean, that's what we transact in the United States, but U.S. greenbacks. But it's like we're not gonna. I don't think we're gonna have much of a wait here, and they think the U.S. dollar is going to lose its global world reserve currency status sometime during the Obama administration. It's going to be that quick. It's just that when things start going up, I'm not going to be afraid to sell some because I'm probably going to buy something else with that. I don't know exactly what, but it depends on what it is at the time. It depends on if something else looks like it's a good deal at the time. But I'm not going to be afraid to sell. I think you're going to see sometime during the Obama administration that there's going to be a real upward push in the metals, very hard, and that's when everybody's going to come out of the woodwork and say it's going to go to the moon. And I know it's not going to go right to the moon. That's ridiculous. It's always going to go to the moon. They exaggerate, but I would actually not hold fiat toilet paper forever or nothing like that. I would make an exchange for another capital asset. I think this is actually coming up a lot faster than people think. It's been a long correction period, and I know a lot of people are trying to hang on or whatever the heck they're trying to do. Some people are anyway. But I think we're going to see a major turnaround here pretty soon. Because what's happening in reality, there's a lot of physical buying. And it's not just like, the usual stories. I mean, it's real. It's real. If they keep suppressing the price like this, they're just going to run out of gold. They're going to run out of gold. They're going to actually run out of gold. They're not going to be able to meet. I mean, yeah, there'll be mines, there's going to be stuff in the ground, but they're not going to get it out of the ground fast enough, especially at this price, because they're not making that much money on it. That's why the stocks and the metals and all the commodities and the miners, the mining stocks are depressed. They're not making that much money. Now, I know there's a lot of ways you could say the price of silver costs this much to manufacture coins and whatever. There's a lot of ways you can skew statistics. There's a lot of ways you can do different things, but just looking at it real simple, the equities in the mining sector would be way up if they're making a lot of money. They're not making a lot of money, which means the price is too low. And since considering there's a lot of physical demand out there, and considering that the Dow is up to a new point where it's 15,000, doesn't that normally mean there's a lot of production of goods and services, supposedly, which means there's a lot of demand for physical metals that are used in industry, like metals like silver? So why is the price down? It's quite obvious why. Because there's some price suppression, and there's a policy in the Federal Reserve to keep the stock market afloat. But looks like things are going to bust wide open here pretty soon. I'm not just saying that because I think when I'm looking at this story, I'm being more like mainstream, and this came right off of more Reuters. I'll say that when you're talking to mainstream is talking about physical silver and physical gold going out of COMEX very quickly like this, and the COMEX being down that low on their stockpiles, and it's the worst it's been in over 5 years. And the rate of acceleration out of the COMEX is high. I just can't see the price going lower. Because if the Americans don't buy it, the Asians are going to buy it. It's like that's one reason it can never go down that much. If the Americans and Europeans don't buy it, the Asians will buy it. It's disappearing out of the stockpiles a lot faster. And actually, whoever the fools are that are suppressing the price of gold, what they're doing is they're basically strengthening the one they call that they're so worried about, China, at their expense. They ought to let the price of gold go way high because it's going to cost China that much more money to get the gold. If they're so worried about China. It looks like that's just like a very foolish policy by the Western elite to like suppress the price of gold, because they're allowing gold to be going to the hands of Asians, which the Western elite seem to be in competition with, for like a very low price. So I think they're very foolish for what they're doing. They ought to let the price of gold go way the hell up. They should. They should let oil go way up too, because actually that's going to be the one way that the dollar is going to be protected a little bit longer. Because if oil goes up a lot, countries still trade oil in U.S. dollars, and that will keep most of the U.S. dollars in overseas hands, because they have to keep a lot of dollar reserves because they're always buying oil. So the higher the price of oil, actually the better it is to keep the dollar from coming back domestically. I think this is going to play out pretty soon. Actually, I think gold and oil is going to start flying up here pretty soon. And I'm not sure about, shorting the stock markets, because, the one thing I said, I pointed out, it looks like J.P. Morgan is hedging the other way. Like, in other words, they're hedging bearish, which means you should be bullish. They're just doing that as like, a strategy just in case, basically. But that usually means it's going to go up even more, despite all the fundamentals against it. It's being propped up by the Federal Reserve. So, if the Fed's got all the money in the world, so guess what? They can keep the markets rising higher and higher and higher. So, the adage of sell in May and go away might not be told true this year. It may not, despite earnings being down and like all the indicators in the economy and the economic surprise indicator from Citibank being down. The markets might still go up because it's Federal Reserve policy to keep them afloat. That's what it appears to be.